While the guessing game goes on about whether Australians will see an interest rate cut soon, overseas there's more evidence that recent rate cuts are starting to pick up economic activity. And that's especially true in the United States, where consumers have picked their economy up. Let's bring in our business editor, Ross Greenwood. Ross, good morning to you. So
Morning.
Is this the Trump effect, or is it something else?
Well, that's the thing you've got to try and work out. There's something different in the United States, certainly to Australia, because if you look at most of the economic settings, they're very, very similar. And yet in the United States, economic growth overnight really has been much stronger than what it is here in Australia. So in Australia, Australia's economy on an annual basis is growing at 0.8%. Now, by comparison, on average over the long term, Australia's economy grows at 3% a year. Right now, it's growing barely above recessionary rates, 0.8%, anemic. In the United States, the growth overnight to the end of December came in at 2.5%. It's much stronger. But then you go down and look at the other measures. Unemployment rates, they're very similar. The inflation rate in the United States, well, it's actually higher than what it is here in Australia. And the interest rates are very similar. The United States had taken interest rates much higher than Australia and then has brought them back down the other way. So the one thing that's different is simply the mood of the consumer. So much of that economic growth coming out of America is because the consumer is confident. And given the fact that around 50% of Australia's economic growth comes out of consumption, in other words, out of household spending, the fact is that Australians, probably because of the effect of those interest rate rises and high property prices, have felt the pinch more than American consumers.
So you've made those comparisons between the United States and Australia. Meanwhile, over in Europe, they cut rates, what, a fifth time overnight?
A fifth time in a row. So they've actually really tried to hammer down their rates. And so it's really interesting just to see. So here it is, they've cut their cash rate to 2.75%. And it's not the end of it either. So anyway, Christine Lagarde, who is the president of the European Central Bank, spoke a little earlier this evening. Let's have a listen to what she had to say.
Is the recovery delayed? First of all, there is recovery. I think that's the first thing that we have to keep at the front of our mind. We went from a very low 23 to almost double the growth in 24. Now, granted, it is not at potential yet, but it's certainly a recovery. And given the job market, given the real income increase, we have good reason to believe that consumption will pick up and will continue to support this recovery process that we expect to continue.
Tears of envy for interest rates at 2.75%.
Well, that's right. And going down further, that's the other thing.
So back on here, I mean, look, all the big four anyway, everyone's predicting a rate cut now for February.
It's almost like they're cheering for it.
Yeah, exactly.
That's right.
And I wonder if the RBA is going to hold the line for a bit more data. So is it a foregone conclusion that we're getting a cut?
I don't think it is a foregone conclusion. A few economists around the place are quite clearly saying, hang on, we haven't beaten inflation yet. But what we can show you is this. This is the market expectation of rate cuts. In other words, the next meeting of the European Central Bank, of the US Federal Reserve, and here in Australia. So here in Australia, they're saying in 2.5 weeks' time, there's an 81% chance of a rate cut. In other words, put down your glasses, there's going to be a rate cut, they're saying, which of course even the government is cheering on for now. But then you go, say, for example, to the United States, they're not so certain. They don't think there's further rate cuts because they say, look, hey, it's growing, it's going pretty well. And now with Donald Trump's particularly his tariffs policy, they think that's going to create more inflation. So they're actually writing off the prospect of a lot more interest rate cuts there. And so here we go for the markets. And you can actually see overnight that spurred on the markets in the United States. The Dow Jones up by 168 points. If we go a bit further forward, what you can see is here in Australia, that's going to actually be reflected here. Market's going to be higher today when it opens. And the Aussie dollar, as we go to that, I think sitting a little lower. That's going to get down to the 50s at some stage in the next little while. 62.1 US cents.
Don't buy anything from America with an Australian dollar then.
No, in that case.
not yet, anyway.
Travel to Disneyland, right?
Yeah, exactly. Go to Japan. Good to see you, Ross, as always. Chat to you again soon.